Hello and welcome to another Independent Finance Brokers Forum podcast. Today I'm joined by Wendy Sampson, who is a client success manager at Deposit Assure. We're going to talk all things deposit bonds and learn a bit more about Deposit Assure and specifically how deposit bonds can help mortgage brokers and, of course, home buyers to get into the market faster. So welcome, Wendy.
Thank you. Thanks very much for having me.
Our pleasure. I'm looking forward to this conversation because as we were chatting just before we started rolling the tape, as they say, you were telling me a story about how you had a recent meeting with is it new to industry broker or just someone that'd been around for a while?
Yeah, she's been around for about 10 years.
And she didn't know about deposit bonds.
Had never used one.
Okay, so knew about them but hadn't actually.
Yeah, knew a little bit, not
Okay.
enough. So yeah, we sort of needed a bit of education now.
Okay. Before we get into that, because this is really going to be an important topic for us to discuss during the course of this interview, let's start off with Client Success Manager. What do you do for Deposit Assure? What does that mean?
It's pretty much the same as a BDM, same sort of role. So really our job is to go out there and educate both brokers and conveyancers. So we play in both spaces there. Brokers obviously making up the biggest part of what we do. But yeah, we go out there to educate them, teach them how to do it and how to look for the opportunity, I suppose, at the end of the day, where they're not used to doing it or it's new to them. We can help them how to identify it.
Awesome. So I didn't even think about conveyancers as one of your target markets. So you obviously go out and meet with them as well and let them know that these products exist.
Yeah, correct. And we do a bit with developers and real estates as well, because it is an education piece, because the more people that know about it, the more widely accepted they are in the marketplace.
Awesome. Tell me what attracted you to work for Deposit Assure? Because I've known you for a long time. You've been in the industry, well, we have been in the industry a long time, I think.
Don't tell anyone how long.
No, we're not gonna disclose age or anything like that. So what attracted you to Deposit Assure?
Just something different. I suppose my career, I've done a lot of different things, and it was sort of something I haven't done. I heard very positive things about the company, and I obviously knew Bella, the other client success manager here in New South Wales, with me. And it was just an opportunity to learn something new and a new skill, really, at the end of the day. So.
Okay, awesome. And you've been there, I think you were saying about 2 years now?
2 years next month. So.
Got an anniversary coming up. Fantastic. Sure. Well, I hope they're going to throw you a big 2-year anniversary party. Well, let's just get right into what is a deposit bond and talk a bit more about that. So for those who aren't familiar with what a deposit bond is and what Deposit Assure does, what is the actual problem that you guys are solving for brokers and for home buyers?
Yeah, so a deposit bond is basically a guarantee to the vendor for up to 10% of the purchase price of the property. The thing that we're solving there really is allowing clients who don't have access to their cash right here and now, convenient or immediate access, to be able to exchange on a property now but have the funds come settlement time to complete their purchase.
Okay, and I mean that's a lot to unpack, so maybe let's get into how a deposit bond actually works. So let's pretend I'm a home buyer. I've already got a home, but I'm going to buy another one, and I'm selling my home and I'm going to buy another one, so I don't have a deposit for that I can provide if I am, let's say I'm going to an auction and I'm successful at auction. So if you could just walk us through the steps of what I would do to get that 10%, as it were, and how that would work.
Yeah, as a client or as a
As
broker?
a client, as a client.
As a client, most of our deals, obviously, as I said, do come through the broker channel. So you'd approach your broker, they'll talk to you about how to do it. It's really for a short-term bond, so we're talking 6 months or under your settlement period. We have 2 assessment criteria. So one is that you've got a loan approval subject to val with funds to complete, or we look at an equity assessment. So if you've got an existing property, or in the case of first home buyers, we can use a guarantor, so mum, dad, brother, sister. We look at an equity component. So if they are, say, buying for $1 million, you need a 10% deposit of $100,000. In the short-term market, we're looking for 2 times equity cover, so 200,000 in their existing property. So at the actual value of your property, less any debt. And either of those will qualify you. We then send you digitally, everything signed and documented digitally. The client has a copy of it, so does the solicitor, the conveyancer gets one, and any broker that has referred it. And then they're able to put that in play. If we talk about the flexi bond side, so you're talking about auctions, that's slightly different. So the flexi bond is for clients, it's a pre-approved bond, and it's for clients going out there each weekend looking for a property, whether that's at auction or it's at a private sale, whatever it is, but it allows them to exchange on a property 24/7 on the spot using that bond. And the unique thing about that for clients that are searching, they don't pay for it until they use the flexi bond. So if they never use it, they don't pay for it, but it gives them that confidence to go out there and be able to bid on something.
Okay. Well, let's just recap that, because you just said a whole lot, and I think we'll want to recap that real quick for everyone who might be watching this. So the first type of bond is more of a short-term bond that you don't need to get pre-approved, and it will be based on the either a loan approval. So let's assume that in this case, I'm working with a broker, which of course I would be, and they have got me a pre-approval. So I would present that to Deposit Assure and say, I've got my pre-approval, and I'm going to be buying, or I bought this property, and I need this deposit bond. And you guys would approve that based on the pre-approval.
Yeah, so the broker actually does it, so they complete the application on behalf of the client, and they will upload supporting documents. There's only 3 or 4 documents required, and then it will go through to our concierge, and they will then run with it and talk to the client from then to get it all finalised.
Perfect. Okay, and so is that probably the more common type of bond that you issue? Is that shorter term one?
It's probably the majority, but we do long-term bonds as well.
Okay. We'll come to that in a second. And so then the other type of bond is this, and I love this flexi one. I'd forgotten that you had this product. So, because a lot of people do these days, they go, to auction and they have maybe a pre-approval, but they're missing out because they're just getting outbid or whatever the case may be. So this bond, you do obviously have to get pre-approved for it. So you've gone through some process to do that. Walk us through what that looks like.
So it's still the same assessment criteria as a short-term bond, so it's either your equity assessment or a loan approval assessment. We pre-approve it. I always say to a broker, go for the maximum that the client's going to bid for, because on the day it can come down, it can't go up on the day. So it just means that the client can secure it. So it really is just pre-approved. It allows them to go out there, bid, exchange right then and there by putting in some details from the contract to sale. At that point, they will get sent the payment link once they put it into play, pay for it, and then they can exchange right then and there.
Okay. That is really cool. I think that product, was that sort of an innovation that you guys came up with?
Yeah,
how long has that been around?
About 2 years. I think it came in not long before I started here, and it's just ramped up and become very, very popular out there because it just has that flexibility component to it.
I love that, and I think that's so important. I can remember way back in the day when you could get deposit bonds and go to auctions, but I think they were pretty fixed, and you probably had to pay for them up front, and it was harder.
And
so you're
had to
making it
wait.
easier, and you had to wait. Yeah,
Yep.
That's fantastic. Just on the whole subject of deposit bonds, do you find that we talked about the education piece a moment ago, but do you find that conveyancers, solicitors, even vendors don't know what they are and go, we won't accept it? Or actually, let me rephrase that question. If you're going to use a deposit bond as a purchaser, should you let the people you're negotiating with know that you're going to use a deposit bond before you maybe submit an offer or whatever, to make sure they understand it and all that sort of thing?
Yes, definitely. Always recommend, part of our process when we teach brokers how to look for the opportunity and how to sort of put it into their process, one of the steps is ensure the vendor is going to accept the deposit bond. Occasionally you may get pushback, so that just means that you can go to auction or whatever and know that you're going to have that bond accepted at the time.
In your experience with the pushback, is that because they just don't know what it is? They think it's a, I don't know, let's say a scam or some dodgy thing or whatever. They just have not heard of them. Is that usually what you hear?
A couple different reasons. So sometimes it might be that the vendor wants to buy a property themselves and they want to pull that money out. That's probably one of the most common ways.
So they would be looking for the release of the deposit in order to do something. Right,
yes.
Okay.
And my answer to that is get them to
Get a deposit bond. Of course.
So, sometimes it is that not knowing, and we can explain that to them. We do get a bit of pushback from real estates from time to time, more so in Vic, because there is a clause in their contracts that says they can take their commissions up front, not so much here in New South Wales where I am. But yeah, look, some people will push back, but they're becoming a lot more widely accepted, and we are backed by QBE, which makes it a lot more readily acceptable out there to people.
And so QBE, for those that don't know, they're one of Australia's largest insurance conglomerates, and backed by, I dare say, billions of dollars of assets under management. So not someone that you would worry about not paying the deposit on your behalf.
And that's where I think it gives a lot more comfort to the people accepting it, knowing that if something does go wrong, QBE's
backed by QBE.
Will pay.
It's interesting, that comment about real estate agents. I never really thought about that. And of course, it's interesting that, if an agent says to you, and this is probably the tip for all of those brokers out there and even buyers, if buyers are watching this, is if your real estate agent says the vendor doesn't want to accept a deposit bond, it might be worth pushing back on that to say, is it the vendor that doesn't want to accept it, or is it you because you want to maybe get your commission released early or something like that? Or a lot of agents just like the safety of having that money in their trust account because they know that when it settles, they're going to be able to debit the commission money from that holding deposit.
To me, the vendor is the person, or their solicitor conveyancer should be the person making the decision on that. The real estate really probably shouldn't have a say in it because it really is around the vendor and their comfort level at the end of the day with it.
Yeah.
But I did encounter an issue recently where I helped a broker get the actual job done. So we were actually able to do it by we have a QBE comfort letter. That got us across the line, but when I did look at the information there, it was the real estate pushing back and not the vendors when I could look at all the trail of emails. So
what state was that?
That was here in
That was in New South Wales. Okay, interesting. Okay, good. Well, that in and of itself has been worth recording this interview, because that is not something I had actually even really contemplated, and I've been in the biz for we decided we weren't going to say that.
Don't say that.
Well, let's just say over 2 decades. How about that? Cool. So I guess we've been talking about some of the common misconceptions around deposit bonds. Are there any other big ones that you come across that we ought to discuss?
Sometimes brokers think that we will replace the cash, that it's cash. So it's really getting the message across. No cash passes hands. It's literally a bit of paper guaranteeing your client. That's why we need to do the assessment to ensure they'll have the cash at settlement, so we don't cover shortfall, which is a question I get a little bit, like clients only got their 5% short, and trying to explain that that's not something that we do, and explaining exactly what it is we do and how we can help the clients, but they do need those funds come settlement time.
And that's a really good point, is that it's a replacement for the deposit. It doesn't cover a deposit if you don't have it.
Correct.
Like if you don't have it now, a deposit bond isn't going to solve that problem. You need to have the equity, or you'll have the cash or whatever that you don't want to use.
100%.
That's a really key point as well. Thank you for mentioning that. Anything else? Any other common sort of issues that come up? I mean, we've covered a few big ones.
Yeah, I think that's the main one. It's just that misunderstanding, which comes back to that education piece, which is what we try and do, make them or get them to understand exactly what we're trying to do and what our product is and how it can help them, and, what type of clients it can help, things like that.
And that's a great segue into my next question, which is, and I think you said Bella today is at a coffee clutch, but you were talking about some coffee clutches that you run, which is probably an education piece, but walk us through the education and the training that Deposit Assure provides to brokers.
Yeah, so we do have some mini videos for one on what a deposit bond is, what a flexi bond is. So it's something brokers can share on their socials, so they can actually utilise them. They can use them with clients to sort of teach them. As client success managers, and we do have another one in Victoria, Mitch, between the three of us, our job is to go out there and educate the brokers, make sure they understand what it is, how to process it quickly and efficiently, what documents they need. You know, I encourage brokers all the time, call me if you've got a scenario, let's chat through it. Sometimes they might be waiting on an approval letter, but the client has equity and we could move it through on that if we can get that documentation. So rather than last minute rush or waiting on the letter and hoping it comes through in time, it is just getting them to look sometimes at a different way of doing it as well.
Good. And from my memory, and I'm hoping this is still the case, I've got a login and a whole access to the website, and I can submit the application for the deposit bond. And I think if it's a short-term bond, they can almost be approved automatically. Is that right?
About an hour or two, and
Yeah.
it just depends if it's like what assessment criteria, because obviously the equity assessment does take a fraction longer, but the team within an hour or two will have the bonds out, quick, easy, ready to go.
Yeah, that's amazing. I mean, in this day and age now with, banks and other lenders have gotten a lot better with their turnarounds, but to get something like that within 2 hours or thereabouts is amazing. So just in relation to how this product would help brokers with, say, client retention, do you have any examples recently, or broadly any example of a broker just going above and beyond with something like a deposit bond and having that client just be over the moon? Have you had any stories or any feedback from brokers? Tell me about one of those.
So we do call brokers and just check in when they've done bonds, ask them, how did it go? What was, was there any issue? Did everything go well? So we get a lot of positive feedback all the time around how great it was, how good the service was, how happy the client was, which is always a good thing. Sometimes they go, the client's over the moon because they're actually ready, they were able to get their dream property really, and that's the thing, whether they're upsizing, downsizing, it's their first house or an investment. It's all about securing the property that they've fallen in love with for one reason or another.
Well, that's really good. Are there any other stories that come to mind that really stand out where you solve someone's problem and they were just over the moon over there?
I think sometimes brokers don't think about this as a solution, so when it does come into play and they offer it to the clients, because you got to remember a lot of the average client out there don't even know what a deposit bond is. A lot of brokers, conveyancers don't know what it is. So it really is a piece about getting that out there, and it's getting the clients to understand what it is and how it can help them. And I think when they're looking and going, I want to buy something, but I haven't sold my house yet. How do we do it? And so when you can offer that to them, that's always a win for the client in that piece there, because they're able then to secure what they want and move ahead with what they're doing without any, delay really in the piece there.
That's a really good, I'm glad you said that. That's a really good thing to maybe pause on and go through, which is what are some of the ways or examples of how a broker would use that? So the one you just gave was someone is wanting to buy, let's say they're upsizing, they want to buy a new property, but they have to sell.
Yes.
So walk us through that scenario.
Yeah. So that's probably one of our biggest upsizers, downsizers. So the people that need to buy and sell, they might have found the property they want to purchase now, may not have even put their property on the market yet. So, it's one of those things to say, we'll push your purchase settlement out a little bit, give you time to, effectively sell your property for the price that you want to get, and it just frees up that capital. So they definitely are really probably main scenario that we get every day, because they're the ones whose money are tied up in the equity of their property and they don't have the access to it right now. And I suppose further on that, sometimes a broker, if I say they're not planning to sell their property but they want to buy another one, they will use that equity and be pulling it out. But this way you can do the bond first and then do all that at settlement, so it's a lot neater, I suppose, moving forward in your transaction as well.
And that example would probably be where a person's buying an investment property?
Yes,
Yeah.
correct.
Okay. And so just running through that scenario, so I've got, I want to buy an investment property. I'm going to use equity in my off the plan property
Yes.
that might not be settling for
Yep.
18 months, 2 years, maybe even longer. Can you tell me a little bit about how you address and how you help brokers with those?
Definitely. So long-term bonds, they range from 7 months to 66 months, so 5.5 years. So a lot of people are quite surprised at how long we can do them for. They do need to have the term built to the sunset date in the clause, and they are only an equity assessment. So we've recently reduced those down. So depending on the term, they range from 3 to 5 times equity cover, and again, needs to be in a property that the applicant or a guarantor for them has. So nice, simple, easy.
Okay. I've used those before a long time ago when off the plan property was, the big thing. This was probably 15 years ago. And it's really important to dwell or pause rather on that term sunset clause. So for those of you who don't know what a sunset clause is, it is where the contract of sale, even though they might have projected the project will finish in 3 years, sunset clause might be 48 months or 4 years. And that's because there are delays that happen in property development, as we all know, and the developer has the option to effectively terminate the contract if you do as the buyer terminate the contract if the sunset clause is reached. So that's why you've got to cover it, because there might be that extension of time.
That's
so,
the risk period, so
Yeah.
you're really in there.
Yeah. So, and I learned that because I was using deposit bonds for some clients, and I was like, sunset clause, what's that, right? So that's the education that I got from working with a deposit bond company on that. So let's talk so we've covered sort of people upsizing and downsizing, so they've already got a home. We've covered investors. What about first home buyers? How can they utilize this product?
They're probably our next biggest area, because a lot of them are either borrowing 95% or something, may not have all that 10% deposit put away because they might be getting the grant or something else, or they may be doing 110% lend, borrowing off mum and dad's property there. So it means they don't have to get the cash from mum and dad to pay the 10%. They can use the bond and come settlement when it's all done, and it relies on mum and dad's property as well as theirs. It's all done and dusted, and they've secured the property, and little fuss.
So this would be, as an example, for those brokers out there who might be dealing in the first home buyer segment and are using a lot of family guarantee stuff, where, as you say, there's no real cash changing hands, but there's equity that's being provided by mom and dad.
Yeah.
And so a deposit bond works beautifully in all of that, because now with the government stuff, you can owe 95, 97%, no LMI, or I guess it's 95, no LMI. So the deposit bond can really be a useful tool in enabling that buyer to get into the market.
Correct, and as I said, we can, in the other instance, use mum and dad's property anyway as an equity assessment, so it just helps there as well. So it's sort of the twofold, depending how they've structured the loan and how they're doing it.
Okay, well, that's really good to know. So I guess the moral of that story is, if you're in that space as a broker, you shouldn't struggle and bang your head against the wall trying to figure out where to get equity from.
Yeah.
Call Deposit Assure and figure out how to use a deposit bond.
100%.
Awesome. Well, we're getting close to wrapping up. We've covered a lot of ground, actually. Of all the questions I wanted to ask you, you've done a great job of answering those and covering that. I might just ask you a bit more broadly what you and Deposit Assure are seeing right now in the housing market. Like, is it improving? Is it staying the same? What are you seeing at the moment?
It's actually improving. So obviously we went through a little phase with all the rate increases where there was a lot more refinancing going on in the market there, people trying to get better rates, etc. But probably in the last year, and as the rates have started to come down, property market started to boom again. Our numbers just go up and up and up every month of what we're seeing, whether they're short-term, long-term, or the flexi. It just keeps going up. So yeah, for us, it's a great market at the moment, and talking to brokers, that's the feedback you're getting from them all as well about what they see is happening out there.
That's great to hear, and I think broadly I've been hearing the same thing, that the market is improving, and of course rate cuts always help to give the market a little bit of a nudge. Final couple questions. Well, first of all, are there any upcoming innovations or things that might be new in the deposit bond space that we can expect to hear from Deposit Assure?
Yes, so we're about to launch a new website very shortly, which will make getting a bond even simpler.
Great.
I don't think it's very hard now. It's, a few minutes work, but it will get even easier and make it easier for everyone to put it in and refer the client, and it's, literally it'll take you 30 seconds and it will be done. So watch that space. That will be coming very, very soon.
And you did mention a moment ago videos and things that you have on the website. Is that something that you would encourage brokers to, if a client doesn't understand what a deposit bond is, just send them a link to that video and say, watch this explains what these things are? So that's 100%. A tool for them to use? Yep.
And also on the website there is a frequently asked questions section, so some brokers use that, and I recommend sometimes just doing that, or put the client to our website. They can see exactly what it is. It's, even now the website that we've got, the new one, will be a lot better, but it gives them enough information to have some comfort. And look, we're always happy to chat to a client if it helps the situation at the end of the day.
So you would speak to that broker's client to give them, answer any questions, give them comfort level?
I try and educate the broker because I think it's good for them to be able to have that conversation, and it just, I think the more you do something, the better it gets, the easier it gets, and you don't feel as, stressed about it. So I do try and encourage them, but every now and then if it's a bit more complex or something, always happy to help them to get the deal across the line.
Fantastic. And that kind of segues into this final question, which is, if you had one piece of advice that you would give brokers about working in this space, working with you, Deposit Assure, what would that be?
Just ask the client the question. Even if they've got cash, they may not want to use it. So ask them and have that conversation. We can train you how to have it and, what the things to say. And I think one of the things we're seeing with long-term bonds, just back to that, a lot more people don't want to use their cash for a long-term bond right now because they're actually earning more interest with it sitting in their offset account than what they pay for the bond. But there is a double factor that if something happens with the developer, their money's not sitting in the trust account either. So I think don't be scared to ask the question to the client. Do they want to use their cash if they've got it? Or, you've got to ask them, how are you going to pay your deposit? There's your lead in to have that conversation.
That's actually a really interesting point that we ought to actually dwell on for a moment, and that is what you just said about the risk of property developers going broke. And that is, if they do and they have your cash, well, it's probably been taken out of the trust account and spent anyway on stuff. But if it's a deposit bond, well, it's riskless really, because if the developer goes broke, you're not getting the development anyway. So the deposit bond becomes null and void, and you're not out of pocket except for maybe the bond fee and some solicitor's costs, as opposed to potentially, thousands or hundreds of thousands of dollars.
Yeah, exactly.
That's a really good tip. I'm glad you snuck that in there right at the end. That was good. Fantastic. Wendy, it's been a pleasure talking with you. I'm sure we could continue talking deposit bonds all afternoon, but you and I both have day jobs, which is fantastic. But I really want to thank you for joining us on the IFBF podcast, and appreciate all your insights on deposit bonds.
Well, thank you so much for having me. It was really great fun.
You're welcome.
Thanks.